AMCs. Very strong in terms of the thought process they've adopted, and very simple in terms of their communication, which is that stick to asset allocation. So instead of inviting Navneet Manor to our studio today, well, we are glad that he's hosting us at their office, where crores and crores of deals and crores of SIPs managed on a daily basis. Yahi wo building hai. Yahi wo building hai where crores and crores of investors, they take a leap of faith. Everything happens here.
No, so that the investment team, our compliance team, risk team, all of us sit here. Okay. But we also have 255 plus branches across the country where we meet our distributor partners, our advisors and our investors there. And they are like head office, they are closer to our partners and investors. We are here where we are managing money. So we are meeting Chirag, Shobit and the team today. So thank you so much, Nikunj. You've been a big supporter. And thank you for your kind words to HDFC. And as our logo says, Bharosa Apno Ka. So all of us strive over the last several decades to ensure that the investors who are trusting us with their money, we are able to deliver what they expect out of us.
What is the total AMC size right now?
The AUM?
AUM?
Yeah, it's over 7.5 lakh crores.
It's impossible to fathom that this is the size. Yeah, I mean, when I started tracking HDFC AMC, it was not even 40,000 crores in terms of AUM.
So my predecessor, when he set up the AMC, and of course under Mr. Milind and then our chairman, Mr. Deepak Parekh, and all of them, when they set up the AMC, if I remember correctly, they were the 36th AMC in India, or something like that. Okay. And from there, the journey where it has come, I think it's a matter of great pride for everyone who's been associated with this outstanding organization for years.
So 7 lakh crore of AUM in terms of a decision making, what to buy, what to sell, what not to buy is more important here also, asset allocation.
Absolutely, yeah.
Every decision is taken in this building.
I'm sure when you meet our fund managers, they will say, you rightly use that word, what not to buy. I think over the years, what has really helped us and our investment team is like reducing the error of commission. Error of omission you will have. There are times when you may miss out on something, but what is more important is making lesser number of mistakes in our business.
You know, I was just walking in the morning and I just realized that HDFC Limited head office was here. HDFC AMC head office is here. Old HUL building which has now been taken over by, this is the old HUL building, right? So I'm just thinking through it, wo Dalal Street nahi, asli Bell Street hai.
No, absolutely.
Seriously, I mean, it's
such I always say that you need a lot of past karma to be in a position where I and all my colleagues are sitting, where we have an opportunity to serve 1.2 crore investors. Touching the lives of crore families is like such a joy, such an honor. And that responsibility as well as opportunity, it doesn't come easily. So all of us have been like very, very lucky, and everybody. So when you entered, you would have seen our mission is to be the wealth creator for every Indian. So all of us get up in morning with that mindset that how do we serve our investors the best, and how do we get more investors into the mutual fund fold so that they can also participate in India's growth story.
No, I mean, I was just thinking through it, and maybe we'll plan a story on this. We go to Dalal Street, which in a sense is the beacon of wealth creation. But if I come in this, not a tiny lane, but this unknown lane at Churchgate.
This is ST Parekh Mark, so
which actually has HDFC Limited,
who could see
HDFC
48
HUL,
years
yes,
back what India can be. And the deep faith on India, as SDFC Group, we always had deep faith on India. We didn't go and set up businesses outside, right? Because we had believed that this country has tremendous opportunity, and there is an opportunity for us as well as responsibility on our shoulders to ensure that how can we also contribute to the growth story of India and of every Indian. That's how all the businesses in the group have always been conceived like that, have been managed like that, have been grown like that.
What's next for the mutual fund industry? Will this SIP culture continue? Will new NFO continues? What are the 3-4 trends in the AMC industry for next 3 years?
I think the biggest is that how do we ensure that this trend of financialization of savings continue to gather momentum. We have a long way to go. So we can celebrate all the numbers of 67 lakh crore AUM, 20 crore folios, 5 crore unique investors, 25,000 crores of SIP. But all said and done, there are still only 5 crore investors. We have a long way to go. And how to take mutual funds to the Bharat? How do we take to the every household? I think that's such a big opportunity, and of course the responsibility on players like us. And we have a long way to go. So keep doing what we have been doing. So I mean, you'll meet our fund managers. We take pride that we have got funds which have got a 30-year track record. I mean, we celebrated 30 years of Balance Advantage Fund. In few weeks' time, we'll be celebrating 30 years of FlexiCap Fund. Then we'll have like so many funds with 15, 20, 25 years of track record. And the industry has put in so much of transparency, so much of technology that we have invested in, and the training. I mean, just to complete those 4T, I think how do we leverage the power of all this and reach out to many, many more? That's, I think, what the biggest mission at our end.
2024, in a sense, was dominated by a lot of election news. It was dominated by earnings news, and it was dominated by IPOs. What do you think will influence the script of how 2025 will move?
I think the IPO is an interesting part because everybody keeps saying that you guys have been getting so much of money as the market's so big. And I've always been saying, one, that of course the existing companies will keep growing. We are still, the mutual fund industry is still a very small portion of the overall market cap, our AUM. But also a lot many more businesses will raise capital first time, or the businesses which are listed will need more capital in future. So the supply of equity will also increase. This is not a good year for the global IPO market, but India will have a record year. India will have a record year. And all kinds of businesses, new age businesses, traditional businesses with a newer business model, and a lot of businesses that have huge opportunity going forward, all kinds of newer businesses coming to the market. And if you have $35 billion plus of annual supply SIP flows, I'm sure this will be taken advantage by a lot of new age businesses.
At HDFC AMC, the market volatility, has that impacted SIP flows or net flows?
No. I think you saw that October when foreigners sold $11 billion, there was volatility, markets fell, but you have seen the record high SIP flows.
You had net flows into HDFC AMC?
Yes, of course.
Equity and non-equity both?
Of course.
Okay. So can I safely say
non-equity, I think fixed income, of course, last few months, short-term flows have been there, but I think industry needs to do a lot more, and we would like government's blessings on fixed income funds from taxation perspective. India should not only raise equity capital from investors, we also need to focus on long-term bonds and developing the corporate bond market.
But just to get a headline from India's one of the largest AMCs, you are confirming it to us that October market were volatile, but you had net inflows.
Yes.
And November also the trend is heartening.
The trend has been heartening, yeah.
So it's not that market volatility, and for the first time we've seen a big patch of volatility. 6-8 weeks has not happened at all.
October was very good. November data I will get in some time. But my belief is that a large part of the flows are very structural in nature, and you have this whole the faith in the SIP, the cult of SIP, I think that will continue.
And which way flows are migrating? Because performance flows will always chase performance. The performance lies with small and mid-cap stocks. Now they are getting jammed for whatever reason. But has that impacted the psychology in terms of fresh inflows or SIP flows into small and mid-cap stocks?
So one of the things, and I'm sure when you speak to fund managers, we have always highlighted that don't chase recent performance. There is something called a recency bias. I think you keep talking about many times, that don't look at what has done well in last 6 months, 1 year. Take a longer term call based on what you get advised or based on what your asset allocation and a good portfolio should look like.
You know, when I started my career, IT services was the high growth sector. In last 10 years, look at Zomato. I'm using that for reference purpose for the benefit of our viewers. An unknown startup has become part of Sensex 30. So the India of yesterday is different from India of today, and India of tomorrow will be different from India of today. The fund manager job is to identify not the India of yesterday, but identify India of tomorrow. In 5 years, what are the 2 or 3 big trends you see in India of tomorrow?
No, I think because you talked about the winners from the digitalization, I think the companies that are focusing on how do they leverage the power of technology and on the digitalization where India is a world leader. I repeat, India is a world leader in digital technology, the way we have built the whole digital public infrastructure. And on top of that, the companies that can leverage that power and can build business models, I'm sure there'll be many winners on that side. Even for our business, technology has played a big role. We are doing SIPs which are 20 times more than what we were doing 10 years back. That wouldn't have been possible without the digitalization of finance. So I think with the digital technology, there'll be many other businesses which will be able to get that J curve, or which will be able to get that exponential growth that they have been working for several years.
The general view is that India is great. Growth is unparalleled. It's enviable if I compare that with global emerging markets. But valuations are expensive, which is that if you are flying an airline in a first class ticket, you don't get value for money. The idea is to buy a business class ticket cheap or economy class ticket cheap, and that is not India.
No, but India,
I was trying to book an air ticket, though we can understand
from
it.
the world perspective, there are two big compounding stories, United States and India. This is where you have seen consistently high growth of the economy, a corporate sector which converts that growth into their revenues and profits, and a stock market which converts those profits into the market cap growth, and a mutual fund industry like us where we convert that growth into the returns delivered to our investors. And I think given the political stability, macroeconomic stability, financial stability, social stability, I think India will remain one of the, I would say, best investment destination for rest of our lifetime.
If one looks at large cap stocks, probably last 4-5 years of performance, even though the Nifty may be at 25,000, Sensex may be 80,000, the CAGR is not even 20%. Which means that there is a long way to go, at least for large cap stocks and semi-large cap stocks before they peak out based on historical averages.
So, I mean, we are 18% of humanity. US is now 60% of the global market cap. You have companies with market cap of $3 trillion plus, which is like close to the overall India's market cap, right? So, we have a long way to go. When we think about large caps in India, from a global perspective, at $100-150 billion, they are still very small, right? Given the size of opportunity here, we are the 5th largest economy in the world, will become the 3rd largest economy in the world. Imagine a 3rd largest economy, a $7 trillion economy. What could be the size of some of the largest companies in India?
So if you have to really talk about this whole narrative, which perhaps is a very common narrative with everyone, is Indian markets are expensive. Gold is trading at a price of diamond. 24 karat gold is trading at 22 karat is trading at a price of 24 karat. If the story is so great, then why everybody is saying valuations are expensive?
In India?
Yeah.
No, I mean, clearly we have discussed this, Anikunj, before that there were pockets of market which were clearly showing a lot of froth that had to get corrected. We have also seen a period of last 4 years where investors haven't seen a correction, a serious correction, like at least a 10%. And it's not very big. I mean, in our journey of, let's say, 1,000 Sensex to wherever we are, 75,000, we have seen many of those corrections. And I think it's healthy that investors see some bit of volatility in the market. This is healthy for the market. We have seen that foreigners have lightened their positions, and maybe as result season kick in, maybe after a quarter or so, and people get more faith on the earnings for, let's say, FY 26, 27, 28 coming back on track, I'm pretty sure that investors would come back, and India will always have some premium. So you cannot compare other countries with a lower capital efficiency. Our capital efficiency has been better, our growth prospects have been better, the governance standards are better, and you will have to pay some premium for that.
There are a lot of themes, Mr. Manoj, which in last couple of years have surprised us and they've delighted us. Impact of Jan Dhan for mutual fund industry and for SIPs. The impact of, let's say, Jio in terms of what the entire consumer tech and fintech ecosystem has got. Government's focus on Atmanirbhar has kick-started the broken defense sector. Government's renewed focus on railways has started the infrastructure boom, so to speak. What are those unique themes which at HDFC AMC you like?
No, this is because you use the word Atmanirbhar. Atmanirbharta and capital markets. I've said this many times. My grandfather lived in India where we had to import wheat under PL 480 system from United States. My father lived where foreign grant was important. I lived in an India where every entrepreneur was dependent on foreign capital. Now my kids are living in an India where we are also exporting capital to a country like Korea. What a transformation. But this is just beginning. I think the reducing the vulnerability on foreign flows has been like one of the very big trend. And if you see the growth of capital markets over the next few years, this will continue to surprise on upside.
So anything which has got to do with capital markets, financial inclusion, demat accounts,
everything will grow in India. We talk about new age businesses which are, the changing dynamics of demographics and the changing behavior patterns. and leveraging the power of technology, we discussed that. But the government's big focus on manufacturing, on infrastructure, that is another very, very big theme, right? I mean, in last few months, people have kind of course, because the valuations went up, and then maybe some of those stocks have corrected with the with some bit of disappointment on the earnings side. But I think post this election, we are all expecting in next few months a big order flow from the government, which will revive, which will kickstart again the public capex, which will give confidence. I mean, you need to inject cash and the confidence in the system, which I'm pretty sure government is doing it. And we will see the private capex also kicking in. So there are many, I mean, India always says a stock picker's paradise. India is a stock picker's paradise. You always get opportunities across many sectors, which you don't get in many other emerging markets.
But you cannot buy everything. No? A fund manager has to avoid 99.9%.
Absolutely. So they will tell you what they have bought.
So let's wrap it up with a couple of final questions. Let's identify some pockets. And I'm not talking about equity market, I'm purely talking about asset allocation. For the short term, which is less than 1 year, what is attractive? For the medium term, which is 3 to 5 years, what is attractive? It could be any asset, it could be any combination, and 5 years plus.
No, even on the fixed income side, I mean, if money is less than 1 year, then you should not invest in equity, right? Unless you are like a very aggressive investor and we just want to put some capital to work, but we wouldn't advise that if the horizon is only 1 year. But fixed income at these yields is not a bad choice. I mean, they are attractive yields. On the equity side, I think the horizon has to be much, much longer. And I would say that, as like Buffett says, that the time to sell a stock is never. And your holding period has to be forever, right? I mean, we are in a country where incomes will keep growing, your aspirations will keep growing, and you invest and invest for much longer term. And that faith, I think, in the new age investors that we are seeing is pretty very, very strong in them.
And it is not shaking, irrespective of what has happened in the world. I mean, there is a problem everywhere.
There will be some cycles. We should not extrapolate that every month the flows will grow. But the part of the flows which are on account of SIPs, that is something that gives me the biggest faith on the structural story of financialization of savings in India.
I'll wrap it up with one word which I think every newsroom has used very, very, powerfully. Every time we've asked a question to a guest, why are markets going higher? And the answer is liquidity. What is this liquidity?
No, that is not right. So I tell you one thing, that if we are buying, someone is selling. It could be a promoter who's doing let's say an OFS or a QIP or whatever. It could be a foreign investor. It could be someone else. For every trade, there is a buyer and there is a seller. I've always been saying for last couple of months that this liquidity will match a lot of supply. And we have seen that. I think last couple of months we have seen some of the large IPOs. Next several months we'll see a lot of primary supply which will absorb this capital. The demand also will create its supply.
So can I go back at least with this message that first October, November, even though markets have been volatile, for the first time the temperament of the market has been tested. We've had a long lean patch and we've seen a 15-20% fall in mid and small cap stocks. The average SIP investor is committed and there is no panic. That's takeaway number one. Takeaway number two, digital is a powerful theme which you would endorse and you think there is a lot of excitement and exciting things happening there.
Absolutely. And I'll also add that I think what has happened in this market correction in last 2 months is clearly people have seen that mutual fund portfolios have done far better than their own portfolios. You track stocks which had a high retail interest, look at the fall in them, look at the drawdown that individual portfolios have seen, compare that with the NAVs where so much of alpha has been generated in last few months. I think that's another message to the investors that give money to the professional fund managers.
You know, I've just come up with this phrase last week, which is that everybody was being a fund manager, but give money to fund managers, please be an investor.
Absolutely.
And let the fund managers do their job.
You'll meet them during the day and you will see how passionate they are. You will see the deep sense of trusteeship, the deep sense of responsibility, and always every day thinking about Bharosa Apno Ka at HDFC.
Well, fantastic. Thank you for hosting us. And they say Diwaron ke bhi kaan hote hain. That is, it all happens in this office here.
Absolutely.
So thank you very much for joining us.
Thank you so much, Nikunj.
Lovely.
Thank you for making.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.